Jumping over to vol. So realized volatility has been coming down, trending down all week. So that's kind of back down to like 36 on Bitcoin. Ethereum not down quite as hard. That's still parked at around 50. But Bitcoin just did get stuck around that 23K for the last week. It hasn't really managed to shake that level off. Now, implied vols small up, so they're not really following through. So we are seeing divergence implied vol. Volatility carry naturally has increased as the implied vols are holding up much better than realized. So we've got carry back to around 13, 14 vols, which is in the 65th percentile across both assets. Both assets a similar sort of amount of carry. So if you are brave enough to sell gamma, you've been getting rewarded for it for the last week. Now, we do get the sense that realized vols more likely to spike on an upside break of 24K rather than testing downside support in the 21 to 22K region. Okay, the macro does matter, but seeing as the alts are getting some love, we do think crypto markets may decorrelate from other risk assets in the short term, at least. Longer term, I'm not sure they can, especially if we do see material downside as a recession might get priced in later down the line, and as the Fed shows that they're not willing to just relent at the first sign of trouble. If that's the world we're heading into on the macro, I don't think crypto is going to escape that. But in the near term, as we have this kind of uptick in net liquidity, this TGA drain that people are talking about, we might get a window or a pocket of strength in crypto markets that has another go at squeezing more shorts and really kind of having a go at 25, maybe even 28K on Bitcoin is doable before the next material leg lower, right? So that's kind of the kind of scenario that I'm starting to formulate in my mind. Okay, looking at term structure, has slipped back into slight contango, being weighed down by that low realized. So we can see that obviously Bitcoin is the one that's quicker to do that. So slight upward slope, nothing crazy, but that's kind of the move down in the front end. Now, clearly not the same sort of story in Ethereum. Ethereum's kind of remained quite flat. But we've got a lack of macro catalyst sort of this week, so it makes sense that front end's going to find a little bit of pressure, especially if the realized dropped. The vol spread, though, as you can see, we did jump. So that front end was at around 6, jumped up to like around 13 now. So Ethereum front end trading 13 vols over Bitcoin, back end trading at around 10. So that's kind of inverted itself from being into contango, the term structure of that vol spread. Realized vol remains around 10 on the 30-day and is around 13 on the 10-day. So it is justifying itself at those levels right now. And like we said, we do think that the Shanghai upgrade coming in March may start to create a kink, and we might see that Ethereum March, whereas they might let this front end drop, they might retain a bit of a bid here in whatever date that this upgrade is going to happen, and that stops the implied vol in ETH from coming down. Even if the realized vol does head lower in that spread, they might keep that spread quite elevated. So that's kind of what I'm thinking is the most likely scenario. I don't think it's going to be anywhere near as material as the merge, or like the vol spread is going to get anywhere near as dramatic, but some sort of relatively smaller version of that dynamic, I think is my base case that's starting to form. SKEW-wise, continued to move in favor of puts as the upside momentum ran out. So you can see here a reversal where we went deeply into calls. We've bounced back out of there. Same sort of story across both 1 month and 3 month. Ethereum SKEW is really leading the charge here. That's where the put SKEW is more expensive. In terms of Bitcoin, that also did flip back in towards puts, but in the long end, it does still remain slightly for calls, which we don't necessarily think is the right way round, actually. I suspect in terms of fair pricing, we should probably have call premium for the short dates in Bitcoin and a put premium for the long dates, because I think on the long dates, it's still the macro is still going to matter, basically, right? So that's my own personal opinion on that. Term structure of the SKEW. That's the point I just mentioned, right? So I think whether that's going to flip to agree with what I'm saying or not remains to be seen. I think it'll probably need a pop above 24K to get everyone excited again, and then that cool SKEW on Bitcoin is going to come back with a vengeance on the front end. But yeah, that's kind of my personal belief about how the SKEW should be priced, and right now it doesn't seem to be priced that way. Okay, if we then jump over to flows, Bitcoin flows, another good week, $4 billion trading notional. Even though we failed to maintain upside momentum in spot, traders are using dips to buy upside across a range of maturities. So you can see, we had a lot of short dated upside call buying kind of around here, this sort of 24, 25K area. The orange line is the 24th of Feb. Those sort of maturities. So, whether it's 10th of Feb, 17th Feb, 24th of Feb, people buying outright calls in the super short dates. But then as we go further out, we're seeing April call spreads. We're seeing December call spreads far out, like 30,000, 50,000 in December and things like that. So generally tend to be the setup, right? People buy super short dated calls to just have some gamma for the explosion. But then they also want more medium-term upside where they'll use longer dated call spreads. Because obviously they don't want to own too much outright Vega, basically. Now, short dated puts did trade a little bit, protecting FOMC and non-farm payrolls, but clearly call volumes dominating by about 65% of the flow. Okay. Now, if we jump across to Ethereum flows, what do we see there? Bit more two-way. Ethereum also having some interest on the downside. February, even out to 31st of March, downside puts trading, those 1,200 puts trading a big clip there, over 10,000 options. So short-dated SKEW obviously seeing some bids. Short-dated upside also saw some big clips. So February, whether it's the green line, which is the 10th of February, which is this Friday, or it's the purples, which are the next week, the 1,700 to 1,800 call area getting lifted in Ethereum. Okay, long dated calls also trading. Those orange bars show you March, but again, much smaller clip size in terms of the long dates. We did see a bullish risk reversal, which I found interesting. 10K clip of that going up, selling the 1600s to buy the 1700 bullish risky, taking advantage of a little bit of SKEW there, and trying to get bullish Ethereum without buying a load of volatility, and taking advantage of the fact that the SKEW is 4 puts. And then, as usual, those downside hedges were focused on very short-dated expiries generally, okay, which tends to be the case that we've seen for a while. If we move over to positioning, what we're seeing there. So dealers are short gamma in both assets, it seems. You can tell that from the blue lines being below zero. So we're here and we're here. Now, we did shoot quite deeply into negative gamma on Bitcoin before we pulled back in spot. And this extreme spot sensitivity of gamma right now in Bitcoin is basically due to the fact that there's this big long strike here at 23K, whereas anything above that pretty much short all the other strikes, right? Whether it's short dated, slightly longer dated, whatever it is. So the main long strike that dealers seem to be sitting on right now in Bitcoin is 23,000. So if we were to break above or below that, the gamma would run out pretty quickly and we go back into deeper negative gamma territory. And that means we'll probably start to move more materially in Bitcoin, right? Now, if you look at Ethereum, gamma is negative, but it's not very deeply negative, right? So it's a bit more sort of controlled. Dealers are short front end. We can see that from the orange bars that are negative. The red bar is the 24th. The orange bars are this week. But the things that they're long against it are purples, which is the 31st of March. And they've also got a bit of June as well, right? Which is the blue. So generally, the street seems to be long the longer dated stuff on Ethereum, particularly on the upside, and short the more local and slightly downside stuff against it in the front end. Okay. So what that means is if we rally in markets, which we favor is probably where we're headed, Ethereum gamma position is going to get much sort of more benign. It's going to be more flat because we're going to move away from the local short strikes towards upside where we're long, whereas Bitcoin's going to go towards a short zone where we might see more acceleration because everyone's screaming to cover, and we get a bit of a snap higher in Bitcoin like we saw a few weeks back, basically, right? So I wouldn't be overly surprised to see that type of price action just on the gamma positioning setup. So that's just something to be aware of. So whereas you might think that Ethereum is going to break technically and has the narrative, it doesn't have the same positioning and the squeezy setup that Bitcoin does, which seems to be short upside vol that the dealers have. So there's a bit of a trade-off there, right? If you want to play the positioning side of things, you probably want to be buying upside in Bitcoin. If you want to play the technical side of things and the narrative side of things, then Ethereum is going to be your go-to, basically. But maybe the answer is you own some outright calls in Bitcoin in the short dates to play that squeeze, and you own some call spreads or something like that in Ethereum to capture the upside, but you don't expect it to be particularly violent or particularly fast. Okay, that's kind of my read from the positioning side of things. Okay, what have I been up to? I'm sure is the question on all your minds. Okay, anyway, that's it for this week. Hope you enjoyed. And look out. We are thinking of producing some new content for you crypto guys out there in the form of like a crypto technicals video. We're not quite there yet. We're just perfecting it, but look out for that because that's going to be good. All right, take care, guys. See you next week.